Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into a report from TD SYNNEX, and trust me, it's not just about numbers. It is also about hidden signals. So let's find out what TD SYNNEX wants us to see. TD SYNNEX just dropped their current report, also known as an 8K form. Companies use these to tell investors about major events. In this case, it is about their recent financial results. We will also see how they will be sharing the profits with investors. Let's get to it. The report is dated March 27, 2025, so this is very recent information. Keep in mind this form is triggered by specific events, so expect this to be very specific. TD SYNNEX, for those who don't know, is a big player in the tech distribution world. Basically, they help get technology products from manufacturers to the businesses that sell them. They operate worldwide, so they have to follow the rules to keep everyone informed. For those who care about trading, their stock ticker is SYNNEX, and you can find it on the New York Stock Exchange. This is a very standard piece of information, but good to know. Now let's get to the heart of it all, the financial results. This section is all about how TD SYNNEX performed in their recent quarter. This is probably why you are watching. TD SYNNEX issued a press release about their first quarter earnings that ended in February. Also, they announced that their dividend will be 0.44 first per share. We will need to find out if the press release will be sunshine and rainbows or a realistic look at the numbers. Let's see what the details are. Looks like the full press release is attached as an exhibit, and exhibit is just extra information included in the filing. Let's jump over to that. Alright, here is the press release. Remember, press releases can sometimes be more about PR than hard facts, so we need to be a little cautious. First up, revenue. They are reporting $14 billion in revenue. When we look at revenue, we are understanding how much money came in from sales. Revenue is down 8.3% compared to last year. That is a notable drop. Next, gross profit. This is the money left over after subtracting the cost of goods sold. They are reporting $921.8 million. This also decreased by 5.1%. This means that it cost them more to sell their products. Now, operating income, this is the profit from their core business operations, taking out operating expenses. It's at 295.9%. This is a big drop, and it means that they are spending more money on operations. The CEO is saying they are executing well and managing costs. He also mentions the improving demand trends. While he tries to sound optimistic, the numbers don't quite agree with him. Let's talk about cash flow. This is the lifeblood of any company. They generated $513 million in cash from operations. That is a good sign. Having cash means they can reinvest in the business, pay off debts, or return money to shareholders. Speaking of returning money to shareholders, they declared a quarterly dividend of 0.44 per share. While this is good for shareholders, this might also be a move to keep investors happy despite the lower financial results. Let's look at the outlook. They are forecasting revenue between $13.20 billion and $30 billion for the next quarter. They are also predicting net income. Keep in mind that these are just estimates, and the real world can always throw curveballs. Quick note on non-GAAP measures. Companies often use these to show a better picture of their performance. By excluding certain expenses, it is important to focus on the GAAP numbers to understand their true picture. One last thing. The press release contains forward-looking statements. These are basically predictions about the future. The company is warning everyone that these statements might not be accurate due to various risks and uncertainties. So what is the big picture here? TD SYNNEX had a mixed quarter. Revenue and profits are down, but they are still generating cash and returning money to shareholders. Their CEO is trying to stay positive, but the numbers tell a different story. It is really important to see both the good and the bad when you're evaluating a company. Time now for my take. TD SYNNEX is facing some headwinds. There is no question about it. The drop in revenue and profits can be a cause of concern, but they are still profitable and generating cash. A positive sign is that they are returning value to shareholders through dividends. One of their strengths is definitely their position in the market. As a large tech distributor, they have strong relationships with vendors and customers. This gives them a competitive edge. One potential risk is the overall economic environment. If businesses cut back on tech spending, it could hurt TD SYNNEX's sales. Overall, I would say TD SYNNEX is in a stable position. They are facing some challenges, but they have a solid business model and are still profitable. I would not call it a home run, but they are definitely not striking out either. Thanks for watching. If you enjoyed this video, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments what company you want me to decode next.